Economist at Coronation Merchant Bank, for joining us for this quick fire chat conversation. You moderated the panel session during the Nigerian Economic Summit regarding monetary policy. So what would you say, your overview during the conversation would be?
Okay, so I'm very glad about that panel session because monetary policy has really been a front burner topic, and it's safe to say throughout this year, monetary policy has been a key factor. Yes, it's been so topical. We've seen what happened with supply shocks, or what's been happening with supply shocks on the back of one, the Russia-Ukraine crisis, so the trickle-down effect of that. We've seen what the COVID-19 pandemic at its peak in 2020, what it did with supply-side constraints, and that impact on inflation, rising inflation. So you can see that not just with advanced economies, but emerging economies, that to tame or to combat rising inflation, that monetary policy tightening has been the order of the day. The Federal Open Market Committee, the European Central Bank, Central Bank of Ghana, Monetary Policy Committee here in Nigeria, we've seen a lot of moves being made, even with Egypt as well. So it was very exciting to steer this conversation. I think, other indicators that we do discuss when we're discussing monetary policy include the exchange rates. We also talk about, of course, the benchmark, which is the policy rate, which has an impact on market rates as well. So it's very interesting to hear from the panelists, share their insights on these indicators. I think one thing that really stood out for me was the conversation around collaboration with monetary and fiscal policy. It's super important for that to happen if we're trying to, achieve this macroeconomic stability that we're all talking about. So I think that's something that stood out for me. I also had a panelist that represented the Manufacturers Association of Nigeria, and it was good to actually hear from someone who is in that sector, who feels the impact of these policy shifts or policy decisions, the implications on businesses. So it was good to hear from him. One thing he did say that stuck with me was that with regards to policies, consultations with the private sector, particularly those that have that direct implication, is very important. So I hope that's one key takeaway that those within the planning committee of the summit would take on board. We had a representative from the IMF as well, who spoke about different recommendations with regards to exchange rate frameworks as well. So that was exciting to learn. There was also a monetary policy committee member as well on the panel, and he did speak to the RT 200 FX policy. Forward steps have been made, and we expect to hear about some positive results, perhaps when the period of this policy has hit 1 year. It came into play in February this year, so let's give it, let's say, till March, April next year, and then we would look at how it's been faring. But so far, so good based on his commentary. He also spoke about FX diversification via non-oil exports, and that is that's very important because, as you know, Nigeria is very dependent on oil revenue for its FX needs, and also hot money as well, so foreign portfolio inflows. So it was also very exciting to hear the perspective of non-oil exports as a source for FX revenue. And he did talk about standardization, which has been a problem. So, the quality of goods that are being produced. And we also need to shift from basic, let's say with agriculture, just basic agriculture products to secondary or tertiary, where we have some level of agro-processing. If we really want to boost
finished
finished products, if we really want to boost FX revenue from the non-oil exports side. And then we had a representative from the Nigerian Investment Promotion Council, and she spoke to us about things they're doing to attract both greenfield and also brownfield investments, direct investments, and that is super important because that is a source of FX revenue, right? And it would help or support FX liquidity in the market. So I think it was a very
rich,
robust conversation. I'm happy for the participants. I saw people scribbling on their notepads. I personally soaked in a lot, and I'm looking forward to, applying some of my nuggets in macroeconomic reports that I shall be publishing soon.
All right, we'll be looking out for those.
Thank you.
Before we let you go, I would also like to get your NDF view regarding, inflations. I mean, we just got the most recent report from October saying that our inflation rate is now at 21.09%. What's your take on this?
Well, to be very honest, I expect to see subsequent upticks in the month-on-month inflation, which of course has a direct impact on the year-on-year. Now, I understand, and we're observing that we've seen moderation in inflation figures for select countries like the US. But here in Nigeria, we have to also take into consideration that there's a flooding crisis going on.
Right.
And that would have direct implications on our food inflation rate, which has been the key driver of the headline inflation for so long. So I actually do expect to see subsequent upticks. In my opinion, I think a figure as high as 22% at the end of this year is not far-fetched. I believe the figure that just came out a few hours ago.
21.09%.
Yes,
yeah.
21.09. So 22 is actually not far-fetched. But yeah, that is my NDF view for inflation.
Well, the economist has told us, so we better take it for what it is. Thank you so much, Chinwe, for your time.
having me. Thank
Absolutely,
you.
thank you.